Let's bring in now Larry Shover. He's the Chief Investment Officer at SFG Alternatives in Chicago. Larry, there's a lot happening at the moment. Perhaps the reason we didn't see a huge amount of volume on markets today is people are slightly distracted by what's happening politically. Is there any ramifications, do you think, at the moment as far as the political process? Are people potentially sitting on their hands a little bit to wait for the outcome of the election?
Well, I think today, the last few days, just a really good consolidation in the market. And it's not really because of the Republican National Convention today. I think it's more that, we look at July 25th, the week starting July 25th, and we have the G20 finance meeting. We have Eurozone bank stress tests. We have Bank of Japan decision, FOMC decision, U.S. GDP. There's a lot going on over the next 2 weeks. And I really think the next move in the market is going to be politically based as opposed to economic based. So right now, I think there's a quiet rhythm of confidence in the market. The S&P 500 just dropped a little bit. But I think it's really people are just waiting for that next thing to happen over the next 2 weeks.
That's a beautiful phrase, quiet rhythm. Can we talk through some of the macro factors then that are playing? How do people feel about the US economy generally right now? These housing start numbers looking pretty good. Are they feeling like things are improving? And at what point does good news become bad news once again if it looks like it's going to force the Fed to raise interest rates?
Yeah, I think the current drivers are people, or consensus seems to be very, very confident about second quarter earnings on the back of a very good jobs report, 2 good ISM reports, consumer spending. So, yeah, I think there seems to be confidence in the air. Brexit is in the rearview mirror by, at least by consensus. And there's a growing credibility in the firewalls that banks have put together, maybe pointing out the fact that Brexit is a singular issue. We know it's a big issue, but not contagion. Like, not everything has to be a Lehman moment like it was back in 2007.
You mentioned the ECB or the potential impact of it. What are you expecting from them? We did have the Bank of England choosing to sit on their hands the last meeting, despite a lot of analysts suggesting that they would go and they would go hard, potentially even 50 basis points at once. What are we expecting from the ECB? What are they likely to do?
I think they're likely to do nothing. With the Bank of England, obviously, people were expecting them to do something, like you said, and do something hard. But here, we have some economic data points coming out that come out too late for ECB to make a decision. I think the best thing is to continue to talk their way through it and perhaps make a decision the following month. But consensus right now seems to indicate that they're basically going to do nothing but talk.
Okay, let's talk through your take on the earnings season so far. We've basically now had financials out of the way. Goldman Sachs, a little bit disappointing, according to the market price reaction today. But overall, it seems that no one was panicked by anything they saw. Do you think that it's almost a drawing a line under where we're at with the banking sector, and now we can start to see some real growth occur in the future?
Yeah, I think what you're seeing is like perception aligning itself with reality, and that is the banking sector has changed. And the fact that Goldman Sachs beat both earnings and revenues isn't a negative. It's just, I think people were expecting a bigger beat than they had. The banking sector, obviously, is a very diverse sector, so it depends on what banks you're talking about. But with mortgage refinance, they're doing really strongly. Fees from investment banking definitely down. But a lot of banks, I think of Bank of America, for instance, really have done a lot to become a lot more streamlined and longer term, I think, in much better health than they were in the past. I still believe some of the banks are some good long-term stories. I believe in the long-term thesis, but it's going to be a really rocky road when you look at net interest margins, et cetera, et cetera.